Hi, Peter Jones, author, property investor and ex-chartered surveyor. And a couple of months back in September, I gave you my somewhat loose predictions for what's going to happen in the property market in 2021. Well, things have moved on and I thought it'd be good to do an update now, middle of November, and tell you what I think may or may not happen in the property market in 2021. John Maynard Keynes, the famous economist, allegedly said, "When the facts change, I change my mind. What do you do?" And in the same spirit, I'm going to change my mind a little bit, maybe because the facts have changed since I last gave my prediction for what's going to happen to property prices in 2021. And I thought a good place to start could be Savills' 5-year forecast. Why? Well, because Savills brought their forecast out earlier in the year, but they actually updated this at the end of September 2020, obviously following in the John Maynard Keynes kind of role, because they've obviously realised that things have changed, and so they've updated their predictions as well. And I thought they were very interesting because if you look at the column for 2021, they've put 0.0% for every region of the country, which is a very bold move. I have never, ever, ever seen that in a house price forecast ever before. And I don't know whether they're just saying literally nothing is going to happen, or whether they're just saying we don't know. But we don't know isn't quite the same as 0.0%. So I imagine what they're really saying is that maybe in some areas prices are going to go up and then come down a bit, or they're going to go down and then maybe towards the end of the year they're going to come up a bit, or maybe that in some areas it's just going to stagnate. But the result is that over the whole country, in Savills' opinion, property prices are basically going to do absolutely nothing. Now, depending upon how you feel about things at the moment, you may think that that's terrible news, or you may think actually that's something of a result. I have to say, I'm usually an optimistic person, but I think that that is something of a result. But the one thing which I do like about this Savills forecast and prediction is that over the course of the 5 years up until 2024, they are positive in every region of the country, including my beloved Northeast, where I do most of my investing, which apparently is going to be up 21.7%, which is fantastic news because just before COVID hit, the Northeast had just about recovered from 2007, 2008, and then of course COVID hit, and I thought, oh no, here we go again. Interestingly, Savills predict that the worst performing area is going to be London, at 12.7% over the 5 years. The best performing area is going to be Scotland at 25.4%, and everywhere else is going to be somewhere in between. Out of the south of England and the Midlands and up towards the north, then house price growth is going to be 20% plus, which is quite interesting. Now, why should we take any notice of Savills? Well, Savills are a large firm of estate agents, and they're top of the market estate agents. They're not just any old estate agents. And they are a large company, and they presumably have a team of people who are paid to sit around drinking coffee, thinking about this stuff, doing research, which you and I don't have time to do. But having said all of that, I'd always take any house price prediction with a grain of salt, because who knows what's going to happen. And it's because things happen that they have updated their predictions, and I'm probably going to update mine. So what has happened and what has changed since the beginning of September? Well, the first thing is that the government have extended furlough until the end of March, and they've also increased help for the self-employed until the end of March. And that's going to avoid this sort of cliff edge which everyone was worried about, where lots of jobs were going to be lost and people were going to be made redundant. So it kicks the can down the road for a bit. They don't have to deal with that problem for now. So for at least for the next few months, that sort of gives some foundation and a bit of solidity to the economy. Otherwise, it could have been fairly disastrous. And other positive news is a couple of weeks ago, the Bank of England actually pumped a further £150 billion worth of support into the economy. Now, the reality is that a lot of the money which has been pumped into economies by central banks is just going into inflating asset prices. So, for example, yesterday, the day before recording this, the Dow in America, their measure of the stock market, has just hit $30,000 for the very first time. Most of that money, allegedly, has come from the Fed just printing, because they printed trillions of dollars. The Bank of England is printing billions of pounds, and it's having the same kind of effect. But if it's inflating asset prices, then arguably that's going to put a bit of support underneath the housing market assuming, of course, that the money actually gets into the housing market. And we'll come on to that in a moment. And of course, the other bit of great news is that there are now several vaccines which are in development, which are almost ready to go. But, and this is the thing, it seems like there's quite a lot of sort of a media hype around this, which is almost making people think that this whole COVID thing is over and that somehow or other we're going to have our vaccination before Christmas or just after Christmas, and then somebody's going to flick a switch and then everything is going to go back to normal exactly how it was before, and we just carry on as we were. That is not going to happen. And I don't want to be gloomy, but let's just look at some other facts. As I said earlier, it's great news that the government have extended furlough, and I'm sure that that's helping a lot of people through this crisis. But the one thing it does mean is that we can't actually see what effect the various lockdowns and restrictions are having on the economy until sometime next year. But this we do know, that what has been going on behind the scenes in the economy has not been good. There are many, many businesses which have shut and which are never coming back. There are businesses which have made people unemployed, and those people are not going to be employed by those businesses again. And in fact, today, Rishi Sunak, the Chancellor, was giving his public spending review in Parliament, and he said that by the middle of 2021, unemployment is going to stand at 7.6%, which is the equivalent of 2.6 million people out of work, which is about 1 million up on the unemployment figures before we went into the COVID crisis. So 1 million extra people out of work. And you can be sure that it's probably going to be worse than that, because that's just an estimate and it's probably the sort of the very best guess, probably. What else do we need to think about? Well, we need to think about GDP, gross domestic product. What's gross domestic product? Well, it's basically a measurement of the value of the economy as a whole. And Rishi Sunak, in his statement today, was saying that the ONS are predicting that GDP is going to be a massive 11.3% lower at the end of 2020 than it was at the beginning of 2020 before the pandemic struck. That is massive. Just to put this into perspective, in 2007-2008, which is the biggest recession that we've had since the 1930s, at that time, GDP only fell by something like 6%. Now, in fairness, it's predicted that in 2021 and 2022, the economy will grow and it will come back. But within those predictions, they're expecting that GDP will only get back to the level that it was prior to the pandemic by the end of 2022. So we've got 2 more years of just getting back to where we were. And within the economy, I can't see how this can't affect the housing market. And of course, as well as all of this, there's Brexit, but you don't hear anybody really talking about Brexit anymore. The media seem to have forgotten all about it. Here's the front page from today's Online Express, where there is a mention of it, saying that as yet we still haven't got a trade agreement with the EU. Now, I fully expect Boris Johnson to pull sort of like the magic rabbit out of the hat and to suddenly appear with his oven-ready trade deal. It obviously wasn't as oven-ready as we maybe were told. But I expect that to happen. But if it doesn't happen, and if we have a no-deal Brexit, then depending upon who you are and where you sit on the whole Brexit debate, it could be an absolute economic disaster, at least in the short term, not to have some kind of a trade deal. And we've got all of that on top of everything else that has happened, but nobody's talking about it. Yet despite all of this, we're actually experiencing a mini property boom, and property prices in the UK are now the highest that they've ever been. Can this be sustained? Well, the argument tends to go along the lines of it's all about supply and demand because of lockdown. People want to move out of city centres, etc., etc., etc. But the key thing which many, many people don't seem to mention is that this will only be a valid argument if the demand itself is backed by finance. You have to have money to be able to buy a property in order for that demand to actually become a purchase. And most of our money when we buy properties comes from a bank. And the banks at the moment are feeling very, very cautious. Now, I don't know what's going to happen because there's a lot of political incentive, I would imagine, for the Chancellor via the Treasury to lean on the banks and to say to the banks, whatever happens, you are going to continue to lend in 2021 and 2022, and you're going to prop up the property market. Why the property market? Because the property market is a big engine of growth within the economy, and that is why the government have given a stamp duty holiday. Now, the stamp duty holiday is due to end on the 31st of March, My theory, and I could be completely wrong, I mean, what do I know? But my theory is that that's probably going to be extended, and I'll tell you why. Because if they were to slam the brakes on and suddenly take away the stamp duty holiday, all they're effectively going to do is stop the property market. At the moment, what they're doing is they're actually making the property market move, and it's one of the few areas of the economy which is actually a bit of a success at the moment. Now, they may be getting nervous about rising asset prices, but I suspect not. And again, I'll tell you why. Because there are trillions and trillions of pounds worth of mortgages on UK property. Those mortgages are held by banks, and what the government really don't want to do is to have a property market crash where properties go into negative equity, which means that the mortgages and the assets on the bank's balance sheets then all become negative, and it means effectively that the banks, on paper at least, would be going broke, and the government may have to bail them out. That's the last thing they need. The government are bailing out all of the rest of the economy at the moment. They don't really want to have to put their hands in their pockets and bail out the banks. So it's in everybody's interest for the property market to boom. So I suspect they will try and keep this going. Now, they won't want a runaway boom, but a nice little boom just to keep things ticking over. And of course, us Brits love our properties. And so if our properties are going up in value, generally speaking, we tend to be quite happy. And so they'll probably be keen to keep us happy as well. So all in all, this is what I think. I think that there is certainly room for some kind of a correction in UK property. Now, I like the Savills view. Savills are obviously saying it's going to slow down, but it's not going to go into a major decline. And that's probably very likely. Now, the one thing I don't know is what the government will actually do. Will they leave the stamp duty holiday? Will they take it away? We know the Bank of England aren't going to raise interest rates. That's not going to happen. But it does depend upon the banks being encouraged to lend. And I suspect behind the scenes that the government are going to do all they can to keep banks lending. So yes, I can see that we could go from being in a boom situation next year to being one of sort of where nothing happens, they just maintain the status quo. And then things pick up again from 2022 as per the Savills predictions. That could well happen. But it wouldn't surprise me because of the lack of the fundamentals. There are no real fundamentals to support a property boom at the moment. Not while the economy is minus 11.3%. Not while unemployment's going up to 7.6%. You do not have property booms when that is happening. And so I wouldn't be surprised, having said all of that, if we do see some kind of a decline. But the more that the government put their hands in their pockets and put money into the economy by extending furlough, by giving money to the self-employed, and we don't know what's going to happen next year. Maybe they'll come up with another sort of extension to the bounce back loan or the Savills and all these other schemes that they've come up with to try and keep the economy going. And that might just see us through this. But the one thing which I don't really expect, and I agree with Savills on this, is that we're not going to see a boom next year. It will probably just settle down and it'll either be a decline, not a crash I don't think, but a decline. How much? Well, that's just anybody's guess. And then maybe a gentle uptick again 2022 through to 2024. We will see. I hope you found this video useful and informative, and if you did, then please come over to my website www.thepropertyteacher.co.uk, where you'll find loads more great property related resources, including free special reports to download and my best-selling series of ebooks, which includes the Successful Property Renovators Workshop, 63 common defects in investment property and how to spot them. And if you're just starting out in property, or if you want to grow your portfolio, you may be particularly interested in the Successful Property Investors Strategy Workshop, in which I'll take you through exactly how I started and built my property portfolio, starting literally with none of my own money, and how I built a portfolio of £2 million worth of property in just 4 years. And that was starting from scratch. I'll take you through everything that I did right so that you can copy me and do the same. And I'll also show you everything that I did wrong so that you can avoid the mistakes that I made and so that you can progress in property and be far more successful, far more quickly than I ever was. And this is based upon my own real life experience, and it took me about 4 years to actually work out how to do property investing properly. But in the 200 pages in the Successful Property Investors Strategy Workshop, I'm going to show you all of that 4 years knowledge condensed down so that you can use it immediately. And until next time, here's to successful property investing.